All right, all right, all right. Let's start going with this. So I'm just gonna start off by looking at Bitcoin on sort of a macro scale, or sort of a more sort of a perspective of what can happen over the next few weeks or even days at the current stage of where we're at, and our sort of current structure overall. I talked about it on Sunday, how we did expect a pullback, where we did have this 5-wave structure towards the upside. You also have your higher time from golden pocket and your previous range, or your previous high that before we made a low at 92k. So pullback was to be expected. That it would be this aggressive, maybe not, but these are things that happen, of course. And we did very aggressively sweep liquidity without having any major reaction. Swept liquidity, no reaction, and we just kept going down from there. Finally, we did come down to your 786, 886 fibs. So these are your higher time for fibs from the lows that we made all the way back up to the recent highs. So I'm just gonna start off by looking at the bearish case scenario here, which I think right now is the most likely scenario, but this can of course change with time and depending on how our structure moves up towards the upside. But yeah, so just locally what we're expecting here is of this 886, 786 sort of fib, also your range lows. You are expecting some type of bounce as markets moves in either 5 waves or 3 waves in generally. We are either expecting, well, I'm personally looking at this as sort of an initial impulse where you're bouncing off the 886 now, and you're starting to form some type of bottom, start pushing up towards the upside here. You have some resistance back up here at 96.9 or 97k, or your previous weekly low, which is going to be 98.9. So I would expect us to push up to some degree here. You could see a smaller push up and then start breaking down again, or push up into that 98.9 and then break down from there. So I am expecting a lower high. And the fact that we did come all the way down to the 86 and swept it today does make it more likely that we come down all the way back to our previous lows and sweep these. So these are very likely to be swept, even if the market does decide to follow some type of impulsive waves towards upside and sweep this wave 5. You are still very likely to come all the way back down again to take out these lows. If you just look at our structure overall, we do have this sort of larger ABC structure that we have a few targets on. You have your daily key level at right around 89,970. This is the first level I will be watching if we start breaking down for a larger time frame bounce. This is where I want to see a fast move or a fast sort of liquidity sweep potentially, and then just a reclaim and a push without letting people really join on board here on the longs. If you do not hold this, and there is the possibility, you have your 382. This is a higher time frame fib all the way from those lows of our higher time frame consolidation. So they are all the way back from here, into the highs. So this is a higher time frame fib that we have not touched a single time yet. You see, we basically front ran. So this is in general a liquidity zone for you that we are expecting to take out. We are expecting to take out these lows, even on spot charts. You did not take out this low either. So this low is also expected to be taken out. So the bull case from where we're currently at, well, it's the bearish case, but also in the more bullish sense, is that we only come down in sort of a three-wave structure. We have this bottom formation between this 86, 76, push up, make some type of lower high, and then get that initial push down into this level 89, 88k, quick liquidity grab, and then back up again. That's the initial wave I would be looking at. I would be looking for a short back up here after a liquidity sweep of at least 97k, and I will be looking for a long between 90 and 88k. These targets are also fib extensions from our ranges, so from our previous range high to range low back to our high that we basically created a few days ago, and now we're back down again. Preferably, you would not like us to not tap into this 886, because if you do tap into the 886, you are also likely to come lower. So you would only like to see us come back into this 89, 90k, basically front run this fib and start pushing towards the upside. Where if you don't do that and you start consolidating here, you're very likely to see instead of this three-wave structure towards downside, you are very likely then to see a five-wave structure towards downside, meaning this is just going to be the initial wave. You have your wave 2, 3, some sort of constellation, and then 4, 5. And this is where it gets tricky, because most people are expecting us to hit into this box. 87k to 85k. This is where people, basically everyone wants to long right now. There's so much confluences within this box that majority of traders have this price marked out on their charts for potential long entries. So if you do get down here, you are very likely to get some type of either a large liquidation wick or break down even further. So if you do come down here, you break below this, tap potentially into this 886, 88.4k, and you start seeing that wave towards downside, you're very likely to either see this big wick down, fast reclaim, and then go up again in a sort of V-shaped recovery, or you are starting to break down even further from here, potentially all the way back to CME gap at around 77k. CME gap right around there. You also have a higher time frame golden pocket around that 76k, and that could be your potential bouncing zone if you do break down. That's a big if. I don't see it happening as of right now, but it's always something we have to be aware of, and we can't just ignore potential scenarios. So just playing off of the bearish case here is that we are expecting some type of bottom here at our current price, a push up into a lower high, and then a breakdown one wave more into this 382 at 89.7, sweep all of these lows, and would like to see a recovery from there. Bear market. Bear market is going to have to be below 72 basically. Well, if you look at some fibs here, let me put on some fibs. Yeah, so if you, well, it's even lower. Yeah, so if you break below the 786, which is 69.5, if you break below that, I think we are in a dangerous spot, and you are very likely going to see you're still likely to see that push up, but you're very likely to see this as your high and this as your lower high, and then get a push even lower. So we would like to not see anything below that 786, which is 69.5k. Of course, we are not likely to go there. We have so many levels in between, but that's worst case scenario target. A break below that, I'd be worried. for my own bags, you're still likely gonna get the relief bounce, but I would be de-risking on that relief bounce if we were to go that low. Yeah, I can break down the fibs. Yeah, so this fib is from this low right here, which comes from Elliott waves here. So you have your potential 1, 2, 1, 2. So there's a few scenarios that you could have here, whereof you either have 1, 2, 3, 4, 5, and then you have a 5 where sort of move towards the upside. And this is basically the last low we made before actually breaking out. So that's why I'm using specifically this low. You can also use something like this low, and then this fib is going to be something like the 886. So it would be around the same price at the end of the day. We can also consider that it's that previous range high. You break below this, you're likely back into this range, and you could come back all the way back into range lows at 60k. So that's where this 786 comes from. You also have your 3.2, which is that same fib. So that's if we were to look at the worst case scenario for something like Bitcoin. If we were to look at the bull case scenario here, is that you, now very unlikely, but it's still a possibility. We are in crypto at the end of the day. Trump maybe says we are buying a shit ton of Bitcoin tomorrow, and then we just start running up from there. I mean, we never know with that stuff. Can't predict it. But so our bull case scenario here is going to be that we are creating this sort of inverse head and shoulders. Very simple as that. Bull case scenario is that you do create that higher low from here. The chances of us actually making a higher low here and pushing into new highs would have been higher if you did not tap the 886. But since you did tap the 886, these fibs are from previous lows into highs. Lows to highs. I can put it on the trend line also, so you might be able to see it. Lows to highs. Yeah, so since we tapped the 886, the chances of this happening is a lot less, but it's still a chance that this structure somehow is already done, and you do start creating this wave one. Basically, you have your initial impulse, your pullback, and then you start creating that third wave, fourth, and 5, which is of course going to be higher than these, but just in a similar pattern for that. Well, I'm gonna change the color of that. You can't see it. You can make it pink. So this is the bull case scenario where this is your wave 2, and you already have that 5 wave towards the upside here. And this is somehow is gonna be your ABC correction, and you're starting to put in that next potential move towards the upside. It's as simple as that. You are gonna come back up, take out the highs. We do have a bullish harmonic, which does take out the highs as well. If we start breaking up, that target's right around that 110k. We does put this in a sort of a could happen. Chances, of course, are not zero. It's never zero. We're in crypto, but you would like to see some reclaims, and then also some more price action based off these waves if you start pushing up towards the upside. Because your typical wave ups here would be that you get some sort of an ABC, put in a lower high, and then start breaking down again. Also would like to see that reclaim of that previous weekly low. So those are basically your scenarios for Bitcoin with where we are currently. The bearish scenario being the more likely one for now. Harmonic is based off a higher time frame structure, so as long as you don't break this low back here, the harmonic is gonna be valid. But this is also a speculative harmonic, since a harmonic is usually traded in one way, which you don't trade the C wave to D wave, but you trade the D wave rejection, because this is a bearish harmonic. Once you get up here, you start shorting it, and then you run it down instead. That's usually how you use. So this is more of a potential harmonic that could still quite easily get invalidated if you break below that C target, which is around 91.5. So there's that for that harmonic. But as of right now, this is your more likely scenario where you have your A, B, C corrective structure, and you would like to see 89.7 to 90k hold for a good sort of end of January and potential run up into late January or February. Let's have a look at Ethereum. So the scenarios here are about the same. Now, there is a slightly more bullish scenario here for ETH, and that is that we did not tap the 86 here. You see that we front ran the 86. We basically only swept our previous lows. We swept this liquidity here. We swept this liquidity back here. This is your range low. That's your current range for Ethereum. Right between that 0.5 fib, that's 786 fib. These fibs are drawn from the lows to the highs for the initial fib. And this 0.5 and 618 is drawn from that previous low back here, which is your LJ wave 5 into that previous high at 4.1k. So if you look at the largest time frames here, you do have this sort of impulse, 5-wave impulse towards upside on ETH, which is why we did suspect us to get this initial pullback, where you have your wave 1, 2, 3, 4, 5 impulse towards the upside, where you are now looking for that 3-wave structure towards the downside, where you could have had it as a flat, and that means you sweep the high, you come back down, and you have your C. With that, if that is the scenario, you would have a 5-wave contracting move inside of this, basically this bearish flag. And from this bearish flag, you would have a 1, 2, 3, 4, 5 wave structure in some way or another. And you are likely to get that. And you're still likely to get that same scenario as for Bitcoin, where you have your initial A, B, C corrective structure towards the downside. So where my interest zones for Ethereum are is of course initially gonna be the 618 if you do get this start of bottoming out pushback. You could also see us squeeze all the way back up into this sort of mid-range. We usually like to do that because we have a bunch of orders regarding this 618, because people use 618, it's such a common fib. That people start entering short here, you stop them out around that mark and then start dropping. So that's something I would watch for. I think if you do tap into this 0.5, you are also likely to come quite a bit higher here, possibly even into this previous high that we did just create around this 3.7k mark, if you do tap into that 0.5. So I'm gonna put a line there as well, and that would be, in this case, this is your pivot point. Pivot point means that this is your important point for flip is bullish and rejection is bearish. We've seen this multiple times now, where you basically have a pivot point. That's a point where you usually get a rejection, initially of the fib, and then you get some type of consolidation. You get a wick up to it, some type of liquidity sweep, and then start breaking down. If you do get that wick initially up and you reclaim that level, you have a tendency of going seeing at least another leg towards the upside. So that's gonna be my optimal level for shorts on ETH from where we're currently at, and that's at 3.5k. And this can of course take a few days to play out here, and we consolidate a bit and we start breaking down and then we come up again. So that's, we could be looking for some short-term scalps towards the upside here. But initially, I am still expecting us to break down as sort of a 3-wave structure towards a minimum sweep of a target at 3.1k, but likely gonna be a sweep of this for previous range low back here, 786 fib, and this fib is a fib extension, meaning you had right from the highs to the lows back into the highs. So it's a 3-wave point basically. And that's your 786 target for that, and that's 2.95k. So that's where I would like to see a bottoming structure for ETH build up if we start breaking down that low. You also have a higher time frame 382 fib right around there at 2.8k, which is nice confluence. We can also see that it's been our previous range lows for a long time, as well as basically being our range highs as well. So that's a very, very important level for Ethereum. And these fibs are I'm using them from all the way back up here from the highs into all the way into the lows. And that's your higher time frame 382 fib. So that's some nice confluence regarding that zone. But I am expecting some shop here, likely push up, likely a rejection lower high, and then start breaking down into this zone, where you could also see that liquidity sweep that you would expect on Bitcoin, and then initial push up from there. So with that, I would like to have a look at Bitcoin again, just showcasing where our liquidity is laying right now. So this is the 1 week heat map, whereof majority of your liquidity is sitting either at 103k, but you do have a bunch of smaller batches between this 97k to 96k range, which would be a nice target for if you do get that initial impulse towards the upside before you start breaking down again. Also building liquidity towards the downside once again, because people are gonna start so long. But you also have a good bunch of liquidity all the way down towards that 89,132 range. Basically below that, it's not as much. But if we zoom out a bit even further, we do see that, yeah, so majority of our liquidity is sitting 91k right now. Likely all the way, but as you can see, we have liquidity all the way down towards 70k. Now it's unlikely that we do sweep all of this in one go. You're more likely to sweep this into this sort of 85k area and then start seeing a bounce up, or just sweep this a larger zone at 91k and then see a bounce from there. That's your optimal sort of sweep around the 89 to 91k, and start seeing some bottoming structure at that price for a potential V-shaped recovery if you do get there, where you basically see this as some sort of inverse head and shoulders on a higher time frame scale. That's what I would be looking for once we get down there. Solana, let's have a look at that. Solana is in a very similar pattern here as well. Same as Ethereum, you did not tap the 886. You did even front run the 786, which is the, I'm using the fibs from the A low to the B high. You even front run that 786 fib. This 786 comes from just our recent lows into our B highs. which we're currently bouncing at. So you are seeing some more strength on some altcoins, which is interesting to see. They might maybe be more oversold compared to Bitcoin just because of our recent dumps before that. But it's in a very similar structure where you rejected the 786 and 72. You did not tap into the 886. No tap into the 886. So if you did tap into the 886, you were likely to come back and take out these highs. We did not do that, so we are likely to come back down and sweep lower liquidity. You did just fill all of these imbalances, fair value gaps, that we did create on this move up. But so what we are suspecting here is that we could get some type of a falling structure, get that push up. But it's the same here. You are still looking for that lower high and getting that potential wave towards the downside here. And even for Solana, I have this on the larger time frame, well, even more on a larger scale, where you have your initial sort of 5-wave structure towards the downside here. You have a sort of an ABC corrective structure towards the upside, and you're looking at 5-wave structure towards the downside, where you're looking for a 1, 2, 3, 4, 5, and then a recovery. And that recovery is very likely to happen within this zone. This is a higher time frame confluence zone as well, and that would be like right around 171 all the way down to 160. Worst case wick. I would expect a wick. I would not expect price to stay here. I would expect a wick down here, and that would be 153, which is your 786 fib. Fib extension. So these fibs are all differently here, but let's just start with our local golden pocket right here, 618, 65 fib. Those are from the previous range, well, 2024 lows into 2024 highs. That's going to be your golden pocket zone for Solana, and that's right around 168, 164. If you were to look at higher time frame zones, 618 fib, 0.5 fib, I'm using all the way back up from 2024, which, well, early sort of 2024, before our range high at 194, to our 2024 lows at 109. And that's going to be your 618 and 0.5 fib, which you would like to see hold on a higher time frame. It's fine to wick below them and sort of a lower time frames, but you would like to see candle closes above them. Worst case, you get some type of liquidation wick. I would expect us to take out this 153 and then recover from there. So this is where my interest zone for Solana lays on the larger time frames, for a potential pullback target. Is there a case where this correction is already done, where you have a potential sort of an A, B, C already, and this is just your 1, 2, 3? Because you did not tap this 886 nor the 786 just yet, the chances of this happening is slightly higher than Bitcoin, but still not as high considering our current market structure, overall, total market cap and Bitcoin. Could also be looking at this head and shoulder here potentially forming in some odd way to get that final push into that 160 area before actually taking off to 300 and higher than that. And this is where I expect like a big impulse move towards the upside. So if you look back at, I'm going to look at a different chart here. So if you look back into 2024 PA, I had the bullish case scenario marked out here before, where if we are in a bullish case scenario, we are likely in one of these structures and you're creating a higher low and you're starting to take off from there, but you would like to see some type of structure actually confirming it. Meanwhile, I thought just based off dates that you are more likely to be in this sort of structure right here, where you have a lot of manipulation both towards the upside and downside. and where you're still waiting for that final push towards the downside to get that final liquidation. Basically get this final push towards the downside, get that final liquidation before that push up. Well, basically something like this. Getting this final pocket of liquidity sweeps, and you're basically sweeping these lows, sweeping these lows. Bull case scenario is simple as that. You make a higher low here, you start forming some type of structure towards the upside and potentially into that bull flag that breaks up towards the upside. Less likely, still a possibility. Let's hop onto that. I had a few altcoins I did want to go through as well that I am very closely watching right now with our current dumps and where I think we're headed. I'm just gonna have a look at total market cap first here. So this is one I've been looking very closely for the last sort of few weeks, basically. Even I've shared it multiple times now, where you had this level of value at a 1.5, 1.49. I think they had it marked out before. And that was basically your key area to either reclaim for a bullish reclaim or a rejection, and you would get quite an aggressive rejection. And we can very closely see here that we did basically front run it for a bit, force this some type of consolidation, and this wick up to it, liquidity sweep, and then just very aggressive rejection of it. Just playing this simple, you are in this sort of a bear flag here as well. So after trying to break out, you're reclaiming that bear flag. Expected move for bear flags for something like this. Conservative target is gonna be just your move down back into that bear flag, and that's gonna be sweep of these previous lows back into that 1.2 trillion range. Structure looks the same on most coins right now, where you have this potential sort of an ABC corrective structure. You are still holding onto these sort of range lows right now. You did not sweep this low back here, but you did tap into the 886, which does mean we are likely to come back and sweep these lows as a minimum. I would have to drop fibs on these for that to actually see if we did tap that. Okay, we did not tap this one, but if you do come back and sweep this target, you are actually gonna come back to sweep this also. Very likely to be swept together in a more of an impulse move. After potentially forming some type of local bottom here, see that maybe that mid-range test, and then get that impulse towards the downside. Initial target is that sweep of liquidity. If you zoom out, we have some higher time frame confluences here, where you do have some higher time frame fibs as well. So initially you have your fib from those previous lows back into the highs, and that fib is your 0.5. That's at 1.18 trillion. And just below that, you have your local 618 from that previous range low. The low that we did create right into the high of that big impulse. So that's going to be your first zone that you start watching. So if you do see a bounce on Bitcoin around that, what was it? Around that 89, 90K. You might not even get this low. But if you do get this low, on alts, because this is market cap excluding alts, I mean excluding Bitcoin, we are seeing some strength on them right now, but it's still a possibility that we start seeing Bitcoin dominance sort of push up again, and alts will take a heavier hit. And you do get that retest of this 618.5 area at 1.118 and 1.15 trillion. It's going to be your first bouncing zone. And likely that's going to be around if you hit Bitcoin 89K. If Bitcoin goes lower than 89k, you are likely to push down into the 786, 618 fib. That's those previous range low highs that we did break before actually creating this higher high on a larger time frame structure. This is still a bullish retest. You would prefer to not tap the 886. So if you do tap the 886, you're very likely to come back. Even if you push higher, you're very likely to come back and sweep all of these lows back here, which would put us in a sort of a bear market state, which we would not like to see. But a wick into the 786, likely close above the 618. That's a possibility I will be watching for if we get a larger breakdown on Bitcoin. Where does the bull case for this lay? That's of course that we just reclaim this mid-range, start breaking up, break above that 1.5. That's the bull case. You tap the 886. Even if you see a rejection of the 886, you're likely to make a higher low and push up into these highs and all those, and into previous all-time highs. Read it. I have it written out here as well. Reach 886, you're likely from inverse head and shoulders of shorts, and come for the highest once again. USDT dominance. Oh. So this chart is also very bullish right now. Bullish for USDT dominance means bearish for Bitcoin. You are right now at that 786. You have not tapped the 886 just yet. These local fibs are from those C high into D low. So you have not tapped the 886 yet, but you are hovering around at 786, and you are, I would expect us to form some type of bull flank here and start pushing towards the upside. Is there a potential wave where this is, well, this is likely gonna be a wave one. Just with how impulsive it is, and you are likely coming back into this sort of 382 before putting in that higher low and then breaking up, and that would also put the rest of the market in sort of a lower high. So this pushing up into this potential bearish harmonic target at 5.14 would push Bitcoin and the rest of the market quite a bit lower. And that's going to be your bearish case here. So a bull case for USDT dominance. Well, bull case for crypto, but bear case for USDT dominance is that if we take the fibs from the lows to the highs, remove some 382.5, is that this actually starts breaking down from here, and you'd start hovering, tap into the 886, hover around here, and then you make that lower high and start breaking down again. Because if you start breaking down again after tapping that 886, you are very likely to come back and sweep all the way into that previous A low, which would put likely in a higher high on Bitcoin, even potentially even above 110k. But until that, the chances are that we are just creating these higher lows, and we are starting to see that impulse towards upside for a potential bearish harmonic that can push us down from 5.14. Yeah, so that would be it for USDT dominance. Total market cap looks slightly different from Total 2, because you don't have Bitcoin in Total 2, but you have Bitcoin in this. So this one is going to look very likely to Bitcoin. Where your zone that you would like to see hold is going to be this 786 and a weekly level, as well as we do have, if we look back, our previous highs back here. So this is going to be your previous all-time highs from 2022 and your 76 fib, and this is where you want to see it hold to make that bottoming structure to push towards the upside. The same case here, when we do sweep this, these lows back here, Bitcoin is likely going to be in that sort of 89k range, 90k range, and this is where we'd like to see the bottom of it. If you do start tapping into the 886, which is going to be that 2.91, you're very likely to push lower into this zone, a minimum, or likely even lower than that. We can look back at these previous highs back here. Potentially even as low as at 2.58 and then push up. So this is the zone I want to see hold, is this 3 trillion mark. I'm fine to wick below it, but I would not like to see any higher time frame candle closes below it, meaning I don't want to see a 4 hour, 6 hour or above close below this price. And then I would like to see that bottoming structure form for a potential V-shaped recovery, or this inverse head and shoulders on a larger time frame. And that would could be then ABC corrective structure into your 1, 2, 3, and that impulse would put us into new highs and likely even higher than that. Let's start looking at these alts that I am looking to DCA on these dips. AVAX is my major alt I am buying right now, basically. I did even rotate some of my Solana into AVAX, as I think AVAX has a higher chance of going a 2 to 3x faster than Solana has. I think Solana does that too, but it's likely gonna take a longer time. So you have this massive inverse head and shoulders on AVAX, where you have initial a 5-wave structure towards the upside here, and a higher time frame Elliott wave 1. You have a corrective structure of 2. You are in the middle of this 3 structure right now, and you had this very nice corrective structure from those 2024 highs in sort of a 3-wave structure move, ABC corrective structure, and now you are likely putting in that potential 1, 2, 3, and then 4, 5, finishing this wave 3 structure into all-time highs and likely higher than that. So if we just look at that, we can use some fib extensions from lows to highs back to lows. Your common target for a fib extension for a wave 3 is going to be 1.618, and that's going to be 109. So that's going to be your conservative target for something like AVAX, where if you're looking at this larger time frame inverse head and shoulders, you are targeting into that 147. So this is a nice zone. I will start to DC out, take profits around a 3x from here, I think. Yeah, 4x even from here. And that would also put us into back to previous highs. So I really like AVAX here on the larger time frames. You have your high time frame 382 that you did previously bounce off multiple times. Also your 236, which I'm fine DCing all the way in between these fibs before we start creating that third impulse towards upside, putting us into new all-time highs and over $100 likely. And as long as you don't break below this target right here, AVAX is very likely in this structure, and you're very likely gonna hit a new all-time high just based off that. So my big DCS zone here for AVAX is going to be between 35, 7, and $28. It's a larger zone for DCAing. It's around a 20% zone. But I am completely fine sitting on that for a bit to get that 3 to 4x in the coming months, basically. WIF is another one I made a whole post about. You can look in my channel. I can ping it as well once again, where I am looking for our bottoming structure to bottom out around this 1.9 into this 1.4 area. I think this entire box is a good DCA zone for a higher low, pushing us into highs again. Of course, it's not going to be a singular structure. It's going to be moving a sort of a impulsive structure towards the upside, where you still get your pullbacks, but still very bullish structure overall on WIF. And I am very much liking our current structure, where you have your ABC corrective structure in the larger time frame. You have your potential ABC here as well, but you're potentially not down with that C corrective structure just yet. And you get that structure move all the way back down into that 1.4, which is going to be my heavy DCA zone. 1.4 for WIF. You have some confluence zones there. You have your 886 from that range lows. Well, wick low to wick high. But also your 113 fib from that previous low that made a high, which is a common bouncing zone. So that's where I'm looking for WIF. I have a blog post about it if you wanted to read it more in depth with why I'm looking for this on WIF. I think WIF goes higher up from here. I think it goes to $8, $8 to $10, with a conservative target around $6. And that's still gonna be 3.6x from here. The Jupiter is one that has been not performing that well. This tried to reclaim that $1 that I was looking for a reclaim before we get this sort of impulsive structure towards the upside. But a failure of claim there, I would be looking all the way back at these wicks or lows into that $0.7 area before actually wanting to buy more Jupe. You could be looking all the way back into this, some fibs here. Could be looking all the way back into this 886 target at 0.59, or just bounce off this mid zone, which is going to be round around 0.66. You basically come down, sweep those lows. You don't tap the 886, reclaim, and then you start seeing bullish structure up there. So around that 0.7 to 0.58 is where DCA zones for Jupiter is interesting. You have been consolidating for a very long time, and you have yet to put in some type of actual impulsive bullish structure towards the upside, aside from these sort of smaller waves. If you were to put in a higher low here, there could be a bull case where this is your initial wave. You have your wave 2, which is a pullback into that 786, and then make a higher low from there and start pushing towards the upside once again. But you would like to see some reclaims of those 618, 65 fibs around that 0.9 to $1 area for Jupiter. Wormhole is one I've been watching as well. Another Solana project. They've been doing not as good since launch, because you basically had that massive airdrop sell-off. But we are starting to build this sort of a rising, ascending triangle. But I am still looking for us to take out this A low, tap into our 618, That's a fib extension target, and your higher time frame 786, which is gonna be all the way from those lows into those previous highs. As a ABC corrective structure, anything below this 786 is where I'm gonna be buying spot for wormhole, and I think you can push at least back into these equal highs back at 0.4, which can be quite an easy, fast swing trade of a 2x around there, and you're likely going to push even higher, where you have your you have basically left some highs all the way back at that 0.77, which is going to be around the 4x. Easy invalidation. If you break below those lows, that's at 0.16. That's where I would be careful with wormhole and potentially de-risk a large portion of my bag. AXL is one I've been posting a lot also, where we are still in this corrective structure. I am looking for this as of your potential wave 2. After you're having this contracting move towards the upside, a lot of coins look like this, where you have a very contracting move towards the upside, moving in sort of a range, and then you have your sort of an impulse towards the downside once again, and then you're waiting for that initial impulse towards the upside. I think there are so many good opportunities in the space right now, and all of these dips are gonna be like, we're gonna look back at them in a month or two and be like, why did we not buy more? That's going to be the typical reaction of something like this in a bull market. So yeah, I'm buying AXL. Anything below this 618 into this 786, 0.54, I'm buying. As long as I would be careful if we do tap 86, but the initial low that we do need to hold is going to be that 0.377. You break below that low, that's going to be invalidation. You would have to be careful looking for potentially a reclaim, and that could remain bullish, or you would have to start looking at different structures from there. Super is one I posted also multiple times now. We did call this rejection here. We expected a rejection of these fib targets here, where you're the same as Bitcoin, looking for either a 3-wave structure towards the downside, or you're looking at a 5-wave structure, meaning you have a still one more wave to go here before actually bottoming out. I think you are fine to DCA super everything between this 618 and this 786. It's quite a big DCA zone. It's a 30% DCA zone. So I am staying more sort of careful here, and I'm gonna wait for some type of confirmation in this zone. This is also your higher time frame 382 from those previous highs back at the 1 into that 2. So this is a zone that's very likely to hold. And that's a common wave 2 target as well. It's going to be that 618, and that's where I would initially be looking for either a swing trade or just spot bags and buying into that 3rd wave, which could put us all the way back up into 5 backs or higher than that. If we use some fib extension from here, we could just look at this as a, let's see. So the common target here for fib extensions would be that 1618 at 2.8. So that would be around a 2x from our current price. Or if you do drop lower into that zone that we want to bid, basically, you're looking at around a 3x, 2.8x, which is where I'm going to be interested for super. If you start breaking below that, I am fine to start looking into this zone as well, but we were likely not going to tap into this zone, and you see that bottoming out around that $1 area. So that's for the coins I wanted to look at. but I can have a look at the requests here. Pengu. I might be better off looking at something like a deck screener chart on Pengu, but let's have a look at here. We can clearly see that Pengu did actually break down today. This is like a rising wedge where you do have so sort of a 3, 1, 2, 3, 4, 5, 1, 2, 3. So you sort of have a 1, 2, 3 move towards the upside here and a potential ABC corrective move where you are looking for a corrective structure here. Let's have a look at fibs. Put those on. Only place I would be really interested for Pengu. So first zone I will be watching is gonna be this 0.31. I think that's just around that golden pocket as well. Yeah, so that's gonna be a golden pocket area. That's the first zone we watch for Pengu. I think it's not very likely to hold just based off our current structure. There is a chance that we do get that initial push up from there, but then get the rejection of that retest, and then tap into the 786, where I would suspect we do see the bottom formation forming before getting that push back up into the highs and likely fill this wick even. I mean, that would be a very nice swing trade if you do get that. Will be around a 2x back into those highs. Could of course push higher than that, but just based off what we have, that would essentially be your target. If you were to look at some harmonics here, not necessarily. Yeah, so that's, I mean, that's as simple as I will be looking at this. If you do see a bullish reclaim here with a lot of volume, you are likely going to see a push higher than this before seeing one type of a larger pullback for potentially them just putting in a higher low for a bullish structure, once again pushing up into higher prices. But for now, this is what I will be looking at. Be careful around these highs. Could see that fake out, break below, and then push down again. And then the interest here lays in this 786 zone, which is around the 0.028, which is going to be around a 17 to 18% pullback from where we're currently at. Fog. I think I have a whole post about fog too. No, wait, that was Mog. Yeah, so you have a very three-wavy structure towards the downside here, but with our current stance here, you does seem you did have 1, 2, 3, 4, 5. So you did seem you have five-way structures towards the upside here. You have your ABC. You are in a very ABC corrective structure right now, whereof you are looking, if you set some fibs here. Gonna use all the reference lows. Yes, you did front run that 786 previously. You basically rejected off around that golden pocket 0.5 area. I'd be looking at the sweep of this low back here, then potentially reclaim that 786. I don't think you see a push down into this 886, which is going to be a 0.1. It's very unlikely, but it's, of course, it's a possibility still, but it's unlikely. Fog is actually quite strong with, well, it's still a major pullback considering it's a meme coin, but still quite strong considering our current structure, whereof you could just be looking at this as a larger, just a falling wedge, where you had this larger impulses towards the upside. You have this large ABC corrective structure into this retest, potential trend line, and then have that impulse towards the upside. So basically anything regarding this 786 or below it, I think is a good DCA level for FOG. You are already down. What is that? 75% from the highs. So your risk is very minimal considering how much down you are from here. So you could have an easy invalidation at the 886. As long as they're above it, you are expecting higher, at least a sweep of these previous highs back here, and that's going to be 886. Well, that B target, I mean. Likely push into this candle back here, and that's at 0.4, so that's a 2x from current price. But if you do push into that 0.16, 17.15, that's around a 2.5x. And if you look all the way back into the highs, you are looking at around a 4x. So that's for FOG. I want to DCA into FOG. I really like its current stance here as well. Very easy invalidation. You're basically risking that 40% to potentially make a 400%. I think that's worth it. So I'm gonna take a nab if you do get this liquidity sweep into the 786. Hype. You have another post about Hype. Well, if you look back at our in Aussie's VC from earlier today, this morning, he talked about Hype quite a bit. I can go through it really quickly. But what we're expecting, it's basically lower. You're expecting it for us to push into lower regions. You're expecting us to push this lower high right here. I guess this could be a potential shorting zone, even of this 23 to 24 bucks. There is, of course, the way that we could look at this as an A structure. You look at the B, that you get further up, and then a C. Less likely right now, though. So I think as long as you stay below this sort of consolidation that we'd have between 26 and 24, I think this is likely to push lower into that 786 at 17 bucks. I know Aussie and a few other guys were targeting all the way back into that 13 to 14 bucks zone. So I'm not buying any Hype just yet. I think fib targets here are going to be nice for DCAs, having just an order at the fibs. Everything below that 618. You did sweep that 4 yesterday, which did basically create this current pump that we are in. Could look for some lower time frame confirmations to enter short on here to get that final push towards the downside. If I were to count this 1, 2, 3, 4, 5. Could see that 1, 2, 3, 4, 5, and then you have your A, B, C, and then you get that 1, 2, 3, 4, 5 towards the downside as well. So there is just that little chance as well. And then I'll be looking all the way back at these highs. So those are your zones that you would be looking for shorts. It's this zone with an invalidation above these highs, or this zone with an invalidation above these highs. So those are some potential short entries for something like Hype. Virtuals. Aussie went through this one as well. I have no real interest in it. I know we are coming back to this previous high basically. I dislike buying anything. So if you just look back at this, I would just prefer buy it here, or sort of in that first consolidation zone, unless you get a deeper pullback for something like this. the risk isn't really there for me, since you like, sure, we can get back to the highs as a 50% pump, but what if you break back into those previous range lows, and that's going to be like a 60% push down? Let's just mark out some potential targets here. Yeah, so that's gonna be the zone that I would be watching. $2. I don't know if it come back all the way down there, but if you do, that's the zone I'm interested in. You could also be seeing just this structure towards the upside here. We have your I'm not sure if I could count this as waves, but guess this could be 1, 2, 3, 4, 5, but then you have a multiple wave 4s and 5 up here, which I don't like. So you do have a bunch of liquidity built up around these lows here, so you could very potentially come back here from that type of low, or you could come even all the way back to here, and that would where I would actually be interested in buying or swing trading it, because then you have a decent risk or a reward back up to the upside into the history prices that we actually have. But this is going to be my initial zone to watch price, 2.16, 2.12. If you just look at the local structure here, yeah, there's not much bounces here. It's just lower highs, lower high, lower highs. You're very likely in a one wave corrective structure right now. If you were to look at this as a 1, 2, 3, so you're likely still in a wave 3, where you are still expecting either us to come lower here in this 3, and then put in a 4 and a 5, or this 3 is done here, you put in this 4, 5, and that's going to be your first A wave, and then you have a B, push up, make a lower high compared to these highs, and then a C, push down, and then you can actually take off. So that's what I would be looking for virtuals. Resistance around this 4.5. I would not be interested in DCing right now after a massive run up like that. Shadow. Let's see which has the oldest data. Shadow is, I think we have older on is Shadow a Solana token? I think it is. Two years. Let's have a look at this. Yeah, because I remember them back in 2022, I think. Yeah, that was before the big blow up. So you have a very impulsive structure here towards the upside. Yeah, so this is actually a very nice. So you had a very nice consolidation here at the lows after having this massive run up, where you did from this sort of BC corrective structure towards the downside. You did form up multiple waves here, and then you did not actually finish your initial wave until you got here. So you have your 1, 2, 3, 4, 5, which is where I'm looking. So yes, I would be looking for this wave 2 here, between that 618 and 786. So this zone is where I would be looking for it to hold. Preferably not tap into this 886, as that would be quite bearish, and you can come quite lower and sweep these lows and then reclaim, and then you could see a bullish structure build up once again. But that you would have to wait and see if that's the case. You also have this as a bullish retest back here at the 786. So as well as you do have, you did not sweep that low yet, so I would be looking for a sweep of that low at, let's see, 78 million market cap. So that's the low I will be looking for us to sweep, and then I'd suspect we get some type of aggressive move from there, and you form some type of bottoming structure here, and you start pushing towards the upside once again. I am actually quite interested in this. I need to do some more research. I like the chart. I like the chart a lot. If we just look back at those highs, that's 400 million. I don't know if you get so far, but I do like this impulse towards the upside. I was looking for the fib extension. So fib extension, you drop from the lows to the highs, back into the potential lows. So I'm just going to write all the way down to the 76. So a wave 3 for something like this. If this is going to be your wave 1, 2, then your 3 common target is going to be that 300 million, 4, and then a 5. I don't know if we could get that far, but not a bad swing trade, considering you could just bid around this 70 million market cap and take some de-risk some off at the previous highs at your 2.5x. I quite like that actually. And you do have that 5-way structure here towards the upside before getting that 1, 2, 3, 4, 5. Yeah, I like that. I like that a lot. I'm adding that to my watch list. Yeah, so easy. Can de-risk some if you break below 58 million or tap into 58 million, but 76, nice entry. 75 million. De-risk some at 86. If you do break the lower, you do start sweeping those lows and see consolidation again. Then you could buy back in for that break towards the upside once again. So those are the 2 plays I would be looking for here. Just have a look at our 24-hour liquidation on Bitcoin real quick here. We can see that we have quite a bunch built up towards the upside here after our liquidity sweep down towards that 92.5. So you have a bunch of long stacking up, but you still have a bit more towards the upside. Any more requests? Or do we feel done for today? Well, thank you guys for listening.